All right, welcome back, everyone, to an episode on the Financial Summit Network. This is our weekly show with Mark Wood, and in order not to do two back-to-back shows, we are going to combine the daily high with the deep dive chart analysis with Mark Wood. Matt, how are you doing this evening out in Japan? It's Friday night. We're going to have you go first, and then stick around as long as you like, but I'm sure you're going to want to go to bed soon.
Yeah, mate. Look, I'm really enjoying this. I feel like I'm a guest here, which is very lovely. I don't have to drive the ship. It's great to see you, Mark. I'm a big fan, mate, and this is the first show we've been on together, so I'm really stoked to be here with you.
Man, it's great to see you.
Thanks, mate.
Yeah, hopefully we're bringing on other analysts onto this network over the next, years to come. And so Matt, why don't you kick us off? Bitcoin price is holding. We did a show yesterday where I was very happy that the MRI top never came. Even though the MRI did come on a couple of exchanges, it did not come on the index itself. And I tend to follow the index because it gives you that aggregate average price. Now, because the MRI top did show up yesterday on a couple of exchanges, I do have to keep that in the back of my mind. But a nice bullish day today will basically have me looking very bullish into the next MRI top.
Yeah, mate, and I couldn't agree more. And as I open the charts right now, I was feeling, I was feeling really bullish last night. I really was. I was hesitant to say I was full blown bullish, but I think that you could read between the lines, and it looks even better tonight than it did yesterday. I'm still completely long in this trade from 63, 328, which is looking bloody good right now. But it's the same thing I've been saying all week. I've just been waiting for this breakout of this, the same thing that we're putting in lower lows, higher lows, blah blah blah. We broke the cycle right here. That was the point that I was really interested in. I really wanted to break this neckline on the W pattern here, which obviously last night when we were doing the show and we were teetering at 64,000, right on that mark right there, I was like, yep, this is it. I'm feeling really, really positive about that. And bang, it has broken it. The next phase for me is this modified Lucid Star, which you can probably not see it at this vantage point. But as I zoom in right now, that is currently sitting at 67,644, which, is still got a ways to go before we get to there. But that's
I
it for
got a, I
me.
got a, I got a question on that, right? So if you
Shoot.
zoom out a bit,
Question
are
without
you
notice.
concerned that you are going right into that SAR once again without a pullback? And the moment it's hit, Bitcoin can go down back to 60.
Yeah. It 100%, it can 100% can do that. And right back down to 60, I'm not worried about because I mean for the Lucid Star to flip again, we'd have to get way, way lower into these points here, which I'm not
Right, right,
concerned.
but not
Yeah.
flip, right? But even if, like, again, remember, it touches it at 68,
Right.
and then over the following 4 days, it goes from 68 to 60.
No, we'll see. The green wave for me flipping is my last line of defense. It's the thing that puts me macro bullish rather than being like just a buy signal. So I don't care about that at all. That in fact it goes the opposite way, Tone, because if we were to hit this, then the wave is green. Then I view absolutely any pullback as a buy the dip at that point. We could revert to a 4 hour time frame at that point where the wave would turn green and then we come back down inside the green wave rather than the red wave, get a green diamond, and I see it as one of the best buy signals you'll get in like a 6 month period. So it actually works the opposite way to me. I'm macro bullish, and I'm no longer concerned about everything. It's completely bullish from me at that point. I might as well stay on the 4 hour time frame as I've pulled it up right now. We are on an MRI top here, which I'm sure Tone will reference, but you can see the distance for that Lucid Star. It looks brilliant. We're above all the moving averages. Yeah, this could be a bit of a blow off, and then we could have, a comeback down to the breakout. But I try not to forecast what downside targets when we're above all the moving averages. I'm feeling really good. We're locked and loaded. It looks great on the 4 hour time frame. There's nothing for me to think any more about it. Because it's the week end of the week, the last show we'll do for the week right now, I'll just pull up the weekly and have a gander. Hey, how many days have we got left in this month? We've got a few. We'll probably have. Does Monday? I'll have to pull up the calendar. Does there? When's
Well,
the?
Monday is end of month. The last day of the month is Monday.
Well, let's do that then. This is us on the weekly time frame right now. I think next week's going to look really great. I really like finally we've broken this point right here, as I said on the daily time frame. We're above every moving average on the weekly time frame, and we're poised to break, as I said, the lucid star, which means every single thing on alphanumetrics is bullish across the board. I think we've got momentum here to really kick on. Let's just review some of these oscillators. The copy curve, as we mentioned on Monday, has rounded now, and when it's making its way to the zero line, which we absolutely want to see, as we've seen here and all the previous times when we cracked the zero line. That's true momentum. And it's what we want to see once again. It didn't stay too long below the zero line, but it's working its way back up. The RSI crossed, as we said on Monday. I was concerned that it was just going to come back and retest the moving average here and get rejected, put in a lower low. It crossed the moving average, crossed the 50 mark, and we're looking really, really strong on the RSI. Finally, the EXA, Socrates ZXA, really, really happy to get that crossed. Now it has really separated itself. I'm loving the EXA as well. So as I come back to you guys right now, get your finger out of your noses. I like Bitcoin across the board on every single time frame, barring the 4-hour MRI top, which could lead to a bit more. But see what the stock market does going into the end of the week. I like it. I like it across the board. Please like and subscribe. Please share it with your friends. Use the links in the description below. Join the free trading bot. We pulled out 5% last night. Wasn't what I wanted, but hey, stat sacking is what we do over here at the Financial Summit. The links are in the description below. Guys, I'm going to say goodnight because it is 11:30 right now, and I've got a beer downstairs and a big family. So I hope you have a wonderful show. I look forward to catching up on it tomorrow. Thanks for having me on.
Also, the Discord group, Matt didn't mention it, but if you have any questions, Matt's always in the Discord group, and he'll help you set up, the bot
Yeah.
through the exchanges in the Discord group.
Yeah, and look, I'd be remiss if I didn't mention, right now we're in beta testing for BloFin. Everything is built. We just want to see 2 signals go through perfectly, and we normally do 4 to 5 signals a week. So as soon as we get 2 clean signals with absolutely nothing go wrong, next week we'll have a big massive launch and some great promos for BloFin. It'll be live. We're live on BloFin, which is absolutely fantastic. It's the best non-KYC exchange I have seen. Great, we got great friends over there. All right, guys.
Awesome. Great
Have a
to see you,
great
Matt.
weekend.
Have a great weekend.
Awesome. Thanks, Matt.
Thanks, guys. See you later.
All right, Mark. Looks like we are left to our devices. I'm gonna do screen share real quick. I'm gonna go through my charts. Feel free to interrupt me at any moment, and then we would go from there. I'm gonna kick off with the weekly time frame. We are still in the descending channel. As crazy as it sounds, this big run-up is actually not that different than the run-up we had back in July. In July, we rallied from 55,000 all the way to 68,000. In fact, the rally in July was even stronger than the rally we are in the middle of now. However, the rally we are in the middle of now is going into October. And as I've said, for months and months and months, time is on our side. We just need to make it to October. And in October, we should be expecting a nice bullish trend in Bitcoin. I've said that for a long time. I said I don't know where the bottom is, but what I do have confidence in is the fact that in October, I can say with confidence, we are in a bull market going into new all-time highs and on the verge of challenging, that $100,000 number, and that all begins or goes through October. Now, October is not even here yet, so it is possible to have one more pullback, but I am not expecting that pullback to go below 60,000. Now, anytime I say a pullback doesn't go below 60,000, I don't mean on a wick. Anytime I say like a number like that for those watching, I mean on a sustained close. And now we can define what a sustained close is. And a sustained close is basically enough time spent below 60,000 to make proper decisions. All right. So yes, we can get a wick down to 57, but I think we'll be back above 60,000 within hours. Okay, so 60,000 is my new floor now. However, it's hard to be full-blown bullish until we decisively break out of this downward channel. And we've already broken down below this channel twice, and we have not yet even broken up above the channel once. So while I am super bullish, I'm cautiously bullish. Let's put it that way. I'm bullish in the intermediate and long term, but on the short term, I think there's going to be a lot of volatility between now and November as we flirt between 72,000 and 60. I think there's still going to be lots of volatility within the zone before it officially breaks out above 72. And when we break out above 72, I think sky's the limit here, right? Because I think there's going to be a massive shortage of Bitcoin on exchanges. And with options on ItBit arriving in January, I think there's going to be massive influx into the BlackRock ETF for options traders and for hedgers. I think people are underestimating the power of options because in order to trade options properly, in order to provide option liquidity, you need the underlying asset to back the option liquidity. Mark, I don't know what your expertise is on options. I do need to run a couple of shows here with people that are options experts. I'm sure you've watched my options course, but I don't know if you are an avid options trader.
I am not, but I am absolutely interested at this point because I do know that options can be a great strategy to, have you kind of hold on to a long position in a downtrend or without having to actually sell your spot Bitcoin and play the option to kind of hedge the downside price action. Is that correct, Tone?
That is correct. So if you have not seen my options course, I will send it to you immediately after the show. Definitely, well, it'll take you more than a weekend to go through it. It's like 24 hours of video. It's a 3-day course, like 8 hours a day for 3 days. So it'll take a little bit of time. But if you haven't seen it yet, it is definitely something you want to, be aware of.
Yeah, I do agree with you. It is something that probably a lot of people in the Bitcoin space or just the trading space in general are not super aware of. And the impact that opening up these options in like a real legit way. Some exchanges, I think Deribit might have had options available, but not all of that is available in the US and it's not super liquid. It was a little spotty, but this is a bit of a game changer, I think,
It
especially with
is. It is an absolute game changer. I think this the Bitcoin ETF getting optionality is as big as the original futures ETF on Bitcoin or the ETF itself. To me, it's just as important, and I think it's going to be a major boost to the price of Bitcoin. Like I'm getting very excited about trading again.
So just real quick, I do kind of agree with your overall view. I still think that there's some volatility ahead into 70, 72K. I think it's possible to drop back to 60, 62K with some wicks below that. But what Matt was saying is 100% correct. Like we have seen the price decisively swing back above 65K. Like we actually had a high daily close yesterday. And in fact, I have a question for you, Tone. I'm curious to get your, but that just tells me that we finally established a low at 50K, a higher low, and then a higher low at 52.5. Now we have a higher high. So we actually have the weekly and some of the larger time frames like 4-day, 5-day, potentially back.
So here's where I disagree. To me, we did not categorically establish a higher high. Okay, I'm looking at this daily chart. It's very clear we established a higher swing low, but the daily close was lower than the prior daily close.
Mhm.
And I know Bitcoin is a 24-hour market and the close of candle is completely arbitrary. So even if you factor in the arbitrary 24-hour day, the best case scenario you have is that on the closing basis, it's a double bottom, right? Because remember, you had, it wasn't just a single close lower than these two, this close and this opening, right? So we had a low close in on August 5th. You see right here, we have a low close on August 5th, and then another close at 56,000 the next day, and then another close at 55,000 the day after. So clearly there are three closes here between 56 and 55. And this is like no one's going to debate that this was not a lower close versus the close in July, like a month earlier, right? You had a couple of closes here. You had a red candle closed at 56, a red candle closed at, 55,950. I'm going to say 56. Like if you take the average close here on a daily basis, it's going to be around 56. If you take the average close here between these three candles, this close is clearly below 55 or below 56. So this is clearly a lower close, and this is clearly a lower swing low. Again, these are not debatable. Well, like no TA person will ever debate whether there was a lower close established and a lower swing low established. This is different, right? I can easily debate that we established a lower swing, a lower close, because
Mhm.
we had a very clear close below 54,000, and the following day was a doji candle, which also closed at 54,000. We did not come even close to a $54,000 close. Oh no, I'm sorry, we did. We closed at 54 back here, but here we closed below 54. So, but it's very obvious that the swing did not go as low. This to me is a very conflicting situation, and I personally don't like it, right? I still want to see a non-debatable swing low that is very clearly above 55,000 on the swing low. And I want to see a swing close that is clearly a pullback, a massive pullback, but it's clearly higher than 54. So a pullback to 60,000 would satisfy all of this criteria, right? If we came back and touched this upwards sloping line, and today this line is at 57, but let's say a week from now, this line is at 58.5, and 2 weeks from now, this line is at 60,000. A move into the 60,000 would resolve this problem for me. But at the moment, I don't like the fact that we did not get a non-debatable higher low.
Okay, so I totally agree with you. And I guess so the question I was going to ask you, the point I was trying to make was this. We have a low, we have a higher low, we finally have a higher swing high and actually a higher close. So it does not mean that the timeframes have reversed. We have the potential to have.
We have the potential, right? Because once again, yes, we got a higher swing than the August one, right? But I really want to see a higher swing than the July one, right? So yes, we have a higher swing high, but the higher swing high is not it's like the least important of the prior 8 swing highs.
So okay, I think this will clarify things for people, and I think I would agree with you. We would like to see either or both of a legitimate higher low, whether that is at 60K, 62K, something that is very, very convincing as a higher low, and or a swing above, let's say, that trend line that you have. I can't tell where the price is, but in fact, I think that the higher low is more important than the swing high. Than the next higher low is more important than the swing high, in my opinion. You're muted. You're muted, Tony.
All right. That green line is at 68, right? There's a but coming. A pullback to 62 is not going to do it for me because 62 is way too close to 66. And we only spent like 25 minutes at 66, right? Like the last 25 minutes, right? So at this point, right, the only way I'm going to take 62 seriously is if we get 62 after we hit 68. So
Yeah.
if we do go to 68, say tomorrow, okay, now 62 becomes a big enough pullback. But if we don't go to 62, if we don't go to 68, now I need 60. So I want to see a greater than $5,000 pullback. So I need a pullback that is greater than the 3 candle pullback we got in mid-September. So the 3 candle pullback we got in mid-September was $3,000 drop, right? We can do it in percentage terms. We got 5%, right? I want to see a 10% pullback in order to take the pullback seriously and not like this is an irrelevant pullback to me. Like it's not even a pullback. It's just like a hiccup in an uptrend. That's not a real pullback. I want to see a 10% pullback. That 10% can either start in 3 seconds, in which case it needs to go down below 60, okay, like 5,900, or it can start after 68, let's say, and now it can go to 62, okay?
Yeah, that makes sense. That makes sense.
So until we get a 10% pullback, to me, this is an uptrend with no pullback. And the higher it goes, the more I'm going to say, if it keeps going higher and it breaks 68, I may have to up that 10% to 15%. Or, it's a gradual scale, right? Like I'll up it to 11%, up it to 12%, right? In a perfect world, we pull back to this green line. We pull back to the trend, this 2 candle trend, and we're already breaking this triangle formation unless we reverse immediately. But in any case, I think right now we need a 10% pullback, and I'm almost ready to say we need an 11 to 12% pullback. If we go any higher, I'm going to say we need 12 to 11 to 12.
And what Matt was saying, I think what Matt was trying to convey, of course, none of this is financial advice, is that any major pullback down to 60 or lower is likely to be a very strong buying opportunity that could probably keep you holding for a good while. And I
Right.
tend to
If it breaks the Lucid SAR first, right? Like if we break above 68, now the pullback is a buying opportunity. If we don't break 68 first, now you have to be more cautious.
Well, I'm looking at something on the 5-day chart that has me, I don't know if it comes first or not, but absolutely looking in the 67.5K range. And I think it's possible that does come first. And then perhaps a pullback. CME is on an MRI top on daily, by the way. And it is Friday. So I do pay attention to the CME chart on Fridays. The weekly,
Yeah, there is an MRI top, a nice blow off MRI top on a 4 hour,
yeah,
and
and daily.
along with extension C coming in on the prior candle, and this kind of blow off top. Like if we make it all the way to 67, we still have an hour and a half to go. We can easily get to 67 on this swing. Look, I don't blame anyone for taking some profit today. This has been a massive run, not
Yeah.
only a 3-week run up, this has been a daily run up. It has been a run up on every time frame. I know it's a green star candle on the daily, but it's an exhausted green star candle on the daily. And if we go much higher for today, if we break 67, I think it's a great time to take profit and come back on Monday and just watch it pull back over the weekend a bit.
Yeah, we can see what happens. It's definitely getting a little hot, and but I do believe that the CME close, especially looking at the weekly, is telling us to expect the price to go higher. I don't think we're going to get that big pullback until the price trends a little bit higher. I don't know if this is going to be the top before a pullback.
No. I agree with you, but what I'm saying is, over the weekend, I think we're gonna pull back, and then we're gonna go back up next week.
Yeah, it's possible. The 2-day chart on spot is on an MRI top as well, I believe. Do you have the 2-day?
I can. Yeah, and the 2-day topped very nicely at the last peak. Yeah, I would take some profit today, on a short-term level. I mean, if you are a long-term trader and you just got in and you plan to hold for the next year, there's no reason to take profit. But if you are using the daily chart or lower than the daily chart, there's no reason to stress out over the weekend. I would just pull a little bit of profit here.
Yeah. Yeah, I don't disagree with that. It's a nice run.
Um,
It's a nice good run above 62K. That was
hey,
a
before I get off my charts, gold's doing well. S&P is at a new all-time high. There's the daily, pulled back a little bit yesterday, but new all-time high on the S&P, weekly, daily this week. Everything looks great. Before I get off chart, so did you watch my show with Socrates the other day?
I did, yeah.
What did you think about him saying that he doesn't like the 4-day chart for Consensio because not all 4-day candles are created equal, and there is significantly less volume over the weekend, and the 4-day candle that uses the weekend is very misaligned.
Well, I like to look, actually, I will look at both 4-day and 5-day. I don't just always stick to the 4-day chart. And that for that reason and a few other reasons. But overall, if we're looking at the history of Consensio, so far, I believe that 4-day chart and the 5-day charts still help us get earlier signals. That was the main reason for me to consider a different time frame, because if you stick with Tyler's weekly and you go back and you look at when this bull market began, it gets you in. The 4-day chart and the 5-day chart can help you get in so much earlier without having to give up so much off the lows, and it can also help you get out of trouble sooner. So his point, I do understand his point, and like I said, I still will look. I kind of combine 4-day and 5-day, but I always will take a look at the Consensio weekly. And as we showed on a prior stream, the Consensio 2-week is still the most conservative look. That gives us the cleanest, clearest look of where the bull market trend is. That long-term 30 SMA on the 2-week chart, it's money. So
Jesus, MicroStrategy is up over 50% since the September lows. And someone asked in the live chat whether MicroStrategies would top first. I don't think so. MicroStrategies is a follower of Bitcoin. It's a leveraged Bitcoin position. And as long as Bitcoin is rising, MicroStrategy will rise faster. So Bitcoin has to turn first. People will speculate on MicroStrategy because they're assuming Bitcoin will go up forever. So when Bitcoin turns, that's when MicroStrategy crashes.
IBIT, I think IBIT gave us a bit of a clue. It actually swung to a new high about a day or two before Bitcoin did. Yeah, it closed on a new swing high a day or two before Bitcoin did, which had me believing that might have been like a canary in the coal mine, to get Bitcoin to 65K.
Oh yeah, no, I can see that. I can see IBIT being right because people with fiat money will pile into IBIT, and IBIT is forced to buy Bitcoin, driving the price of Bitcoin higher. The driving of the price of Bitcoin higher by default automatically makes MicroStrategy go higher because it's a leveraged Bitcoin position. So you got to look at it from a sequence of events.
Yeah.
Yeah, you can certainly
So
use
kind of
the Bitcoin ETFs to predict the future of Bitcoin and then predict the future of MicroStrategy. So I would put them in that progression.
yeah, and IBIT if you look, I don't know what the day is, but if you look at that IBIT daily chart, it closed or swung above that high right there. Yeah, that candle.
It was the 24th of September.
So
IBIT made a new swing high. If we go to daily chart of Bitcoin, Bitcoin did it the following day.
following day, yeah. So I was watching that, and that was giving me some confidence that Bitcoin was going to swing above 65K. I just felt IBIT might have been leading things right there.
Oh, wait, that's a 2-day chart. Sorry. Oh, 3 days later, 26th.
Yeah, yeah,
Yeah, yeah, yeah, I can see that.
yeah. It just kept me bullish. I felt that that might be a pretty strong signal, and I would have been surprised if Bitcoin didn't swing above 65K off of that. But you're right. I think that sequence of that order of events right now is probably uh, a good thing to consider. The ETFs driving spot driving MicroStrategy.
Yeah, I'm gonna, while you talk, Mark, I kind of totally missed last week's closes. I think I'm gonna stop doing this weekly. It's just annoying and it's not necessary. I think I'm now gonna start just doing this monthly, and then I'll keep quarterly stats and monthly stats.
Okay, it is handy to have that information just to continue to track it.
No, I'm gonna track it, but I don't feel like tracking it weekly anymore. I think the ETFs have been around like 9 months. I think monthly stats are good enough.
Yeah. All right. Well, you want me to share my screen? You got anything else to share?
Yeah, I'm gonna come off screen share. Go ahead and share a screen. I'm gonna update my spreadsheet, but I'm gonna listen and keep an eye on what you're saying. If I have questions, I'll jump in.
Okay, so I'm going to start with this sweeping view of gold because I have a theory that gold is leading Bitcoin, and I just wanted to show people what I've been watching in gold. So this top here in 2011, I might have it marked on this chart. Let me see. I don't. The ETFs basically this top in 2011 was the culmination of the ETF release. It was an 8-year bull market basically with this little bear market right here in 08, which wasn't a little bear market, it was a big correction. But I have it marked. It took 3,229 days to get back to a new all-time high in 2020, and then it took 4 years of kind of like this accumulation pattern to break out of it. I believe gold is in some Peter Brandt is calling it like a complex inverted head and shoulders. I don't disagree with that. I kind of see it more of like a kind of like a cup and handle. It doesn't matter. The target, the measured move is the same out of it. But as we can see here, I have these highs marked. We had 1 stab, 2 stabs, 3 stabs, 4 stabs, 5 stabs to finally break out of this because it was a new all-time high. The prior all-time high was at 1922-ish. So this was frustrating for gold traders probably because it swung to a new high. And then what was this? This was a pretty decent correction here. Oh, where'd it go? From that swing high down to this channel, it was a 20% correction. And then it just chopped. And we had what I believe was a spring bear trap, and then descending channel. And finally on try 5, 6, 7, 8, gold broke out. And we can see, I believe this is 30%. Let's take a look. We have from the breakout, yeah, it's just about 30%. Okay, so why is this important? Because I believe Bitcoin is in freakishly similar pattern, except for this part, which we would look at as either the candle or whatever, because Bitcoin is in the broadening wedge. So let me flip over to that. So if gold, so here's my theory. My theory is that gold is leading Bitcoin out of this 70K range eventually. All right, here it is. So here's my chart. Here's my chart on Bitcoin. It's kind of, I got a lot of crap on there, but the idea is we have this massive cup, okay? Top formed in 2021, took 3 years to get back to the high. So that equates to many, you know, if 3 years trading 24/7 is equivalent to many years in gold getting back to the high. And we've had 1, 2, 3, 4, 5 stabs at trying to break out of this handle or this broadening wedge. Now, now a descending broadening wedge, I don't know. I don't know off the top of my head. I want to say it has like a 79% chance of breaking to the upside. So the probability of the price eventually swinging above this resistance between 67 and 70K, let's call it, is very high. Now, what Tone and I were describing or discussing earlier is maybe it swings up here, turns back around, comes into this area. I'll show you why I have these red horizontals, because it was really key. And then maybe after the election, here's the election in the green horizontal, green vertical. After the election, swings out. But let's just project if Bitcoin makes a similar move to gold after this breakout. Okay, let's just say it breaks out after the election to 30%. Well, that gets right almost to the measured move of that. This measured move is only for the broadening wedge, not for this cup and handle, which we discussed on the end. So 30% gets the price to about 88K, which I believe should be a no-brainer, right? Now, I have this marked right here, the 1.618, that's a fib retrace, taking a measurement from the top of the bull market down to the bottom of the bear market. Bitcoin has always gone back to the 1.618. We can't say that it will never do it. We can't say with 100% certainty that it's going to do it again. However, I still think it's quite probable that once this area of resistance is dealt with, 102K, I believe it's very, very highly probable. And then we can talk about the measured move of this cup and handle and how to deal with that. We kind of discussed that on a stream earlier. So that is kind of my overall bullish bias. Gold is leading Bitcoin. And then here's what I look at. I look at gold in this way, Tone. I don't look at it. I don't look at it in the opposite. What I'm looking for is a clear sign that gold has made a top versus Bitcoin. Okay, because I believe once that has happened, and Peter Brandt actually put out a really good tweet a couple of days ago, maybe yesterday, saying, "Hey, it might be time to shave some profits off of gold." And he might have even said, roll it into BTC. But I think that I've had this theory for a long time, that there's a small group of savvy institutional traders that trade gold and Bitcoin back and forth. And they're going to stay in gold for as long as it makes sense. And once the Bitcoin chart, once gold loses momentum versus Bitcoin, it makes sense to roll some of those profits out of gold into Bitcoin, because those profits can be compounded significantly with Bitcoin making a double the size move to gold. So now I don't feel confident that this is a top yet. However, I probably could draw a trend line. It looks like there might be like a trend line here. Yeah, we kind of have like this. Rising channel. This is basically a bearish pattern, actually, coming from a downtrend. If this breaks, this is the 0.038. If we lose this red support here and drops out of the channel, I believe that's going to spark Bitcoin above above $70,000. Or let me put it differently. I believe Bitcoin will be trending above 70,000 if and when this happens, and it might get some fuel coming from this gold market. Now, there's something like $17 trillion in gold right now. So we're not talking about $1 trillion coming into the Bitcoin market. We're talking about maybe a few $100 billion. But that is enough with a multiplying effect to have a significant impact. And if I did a breakdown, we would see every single time this chart has shown us a top, we have seen strong moves from Bitcoin. So that is my gold Bitcoin equivalency analysis. Do you have any thoughts or opinions on that, Tone? Do you think I'm out of my mind looking at that?
Well, maybe. Uh, I, uh, I just don't see as much of an importance in this relationship as you do. At least I don't see the TA aspect of it, right? To me, Bitcoin and gold are as equal to each other as assets, right? So to me, Bitcoin and gold, it's like one of those SAT questions, uh, gold to what is the same as oil to natural gas, right? So it's uh it's almost like looking at a relationship between oil and natural gas because both are so similar, even though they're very different. I mean, you can get people to, oh, one is can be a byproduct of the other. Sometimes you get oil where you don't have natural gas. Sometimes you get them together. Sometimes you utilize them both. Some countries function on natural gas and don't care about oil, right? So, but to me, they're so similar in that a person that has an interest in oil should always follow what's going on with the natural gas market. And a person that has an interest in a natural gas market should always, follow what is happening with oil. It's the same when it comes to gold and Bitcoin, right? They will rise together and they will fall together, and occasionally they have an inverse relationship. But they are just tied at the hip based on their reason for existence. Or not, I shouldn't say reason for existence. I say based on reasons for speculation. It's one and the same.
Yes, I know exactly what you're saying, and so what you're saying is that they are still kind of macro correlated, which I do agree with. And BTC is still macro correlated with the S&P. There are periods of time when they kind of like move away from each other, but
Right, there are periods of time where they are negatively correlated, but the reason for the negative correlation is because of the original correlation. It's kind of weird to explain it, but I'm sure you understand.
I do understand. Let's just see something here. So right here, December. Let's just call it January 2023. Okay, January 2023. Let's see what the price of Bitcoin did in January 2023. Okay, here's January 2023. I'm just trying to show my point here. So right here, Bitcoin was at $16,000. That gold versus Bitcoin chart topped. Now, it kind of happens symbiotically, and it just happens in a way because Bitcoin does move faster than gold. But once that top became clear, Bitcoin accelerated from $15,000 to this move all the way up to 30. It basically doubled in price. And then if I go back to that chart, I probably should keep these closer. The next major top that this pair saw was let's call it August, September 2023, right? So now if I go back to the Bitcoin dollar chart, September 2023, that was the $25,000 low. And once again, we saw the price double. Okay. So my point in this is that, look, this is digging in the weeds, and I don't expect a lot of people to understand what I'm talking about, but I've just been tracking this for several years now. And so my theory is that gold is leading Bitcoin. It has broken out. Bitcoin is going to make a 30% move to gold, but it's or similar to gold, but it's probably going to be more like 60%. And that momentum is possibly going to kick up when the weakness in the gold and Bitcoin chart shows up. So now, and how great would it be, Tone, if my theory holds true and we get another doubling out of the price from 65K? We're looking at $130,000 Bitcoin. So
That'd be nice.
yeah, so this isn't a solid. I don't feel yet that this is a strong top. I feel it's possible. And if this channel breaks, and my theory holds true, I do believe it's going to send Bitcoin away. Now, you are right, Tone. If you have an interest in gold, and it actually, I believe, strengthens my argument. If you have an interest in gold and an interest in Bitcoin, and you're savvy, then you're very happy with your gold position because you've seen gold make a 30% move, whereas Bitcoin hasn't yet broken out. And so you are going to want to take some of those profits if you're a good analyst or a good trader, when it becomes more risky to hold the gold, and you're going to want to risk. And here again, Tom, I'm only talking about a couple $100 billion. Like, I'm not talking about the whole macro look of gold exiting. It's just a small group of institutional traders like Tyler Jenks and Peter Brandt, in my opinion, that understand this. And they are going to want to just risk 1 or 2, 3, 4, 5% of those profits and take a gamble with Bitcoin and see if they can compound some of those goals. They're going to keep their gold position, I believe. I don't think they're exiting completely. But anyway, that's enough about that. Let's just take a look. Let me show you what I was looking at on the weekly chart, because I got a signal that I love. It was right here. And when I turn on the drawings, we'll see the weekly RSI. CME gave us a clue on last week's close, what spot followed through. I've mentioned before, but I don't mention it very often because we don't cover oscillators too much. I often find patterns on oscillators are more accurate than patterns on price. And so when you get this series of lower highs and lower lows on the RSI, this is going back to 2023. And then all of a sudden you get a close back above this moving average of the RSI and breaking this trend line. If we look at the price, this was October 2023. So this was coming out of the consolidation in the summer, timing very similar. We're a little bit early, but same thing here. We've got a high, low, lower high, lower low, lower high, slightly lower low, and then breaking out. So when I saw this trend line breaking, and when I saw the week close back above this moving average, I got really bullish. So right here, October 9th, 2023, coming off of this sideways low at $25,000, 1, 2, 3, 4, 5, 6, 7, 8, 9 straight green weeks followed that. Okay, taking the price from $15,000 up to where was that top? 45K. So in my opinion, we're getting a very similar signal right here, breaking that trend line. And I've got all these other oscillators. Well, we're going to take a look at this one down here, stochastic RSI and stochastics RSI, and this is iFish. All the oscillators on weekly are trying to cross green. I want to show one thing quick on the 2-week. That same consolidation period back in September, October, got a cross of the 2-week stochastic RSI. I've mentioned a couple of times, I don't follow this oscillator very often, but when it gets down this low and starts to try to cross up, I pay attention. This was a failed signal. Now we're getting the cross again. We got it confirmed on the last 2-week close, and we're getting some divergence. I do believe this signal is going to have a lot more strength to it. Once again, on the 2-week chart, that led to 1, 2, 3, 4, 5, 6, 7, 8 consecutive 2-week green candles. So we might be in the midst of a very extended trend that could absolutely, in the midst of one of those 2 weeks, see a drop back down here. But overall, I'm pretty damn bullish. The high time frames, are getting me believing that Bitcoin is ready to break out of that broadening wedge pattern. What do you think about that, Tone? You're muted.
All right, still muted. Yeah, no, that makes total sense to me, and I can't wait to watch it break it. Like, dude, it's been a long time waiting for this breakout, and we are so far behind on this cycle as far as percentage gain since the halving. I know we've had one of the best runs from the low going into the halving, and that's why we were at new all-time highs before the halving for the first time. But I still, want to see us in line with prior cycles at this point. And we do need a break to like 85, 90 in order to keep up.
Well, you were talking about time earlier, and I was talking about time. On our previous stream, I mentioned I was bullish but cautious because these last 3 weeks of watching the price do what it's doing right now is exactly what had to happen from a timing standpoint, not from a price standpoint, because the sideways was starting to roll over some major moving averages that was getting me a little bit cautious. I'll show one thing I was watching on the weekly. I'm curious to see what it looks like, but let me go to the 5-day chart real quick. Like I mentioned, I like the 4-day and the 5-day combined. Sometimes each chart is going to give us different signals, but this is a bullish signal for me. I've got the orange 8 crossed above the 21 EMA. That's bullish, especially on 5-day, with both moving averages crossed above the middle median of the band. That puts a high probability at $68,500 right now. Very high probability. If we look back at the last time the orange crossed above the yellow, which is bullish, we can see that neither of the moving averages made it above the median of the band, which led to losing momentum. Otherwise, I would have been targeting $70,000 had these moving averages crossed. Okay, we can see right here when here it is right here. So again, coming out of that consolidation, out of this sideways consolidation last October, September, October, same signal right here. We got the orange crossed above the yellow, just moving above, and the price went straight to the top band, and then the close above the top band is what really expanded the move. So what I would be looking for at this point is a move up to 68.5K. And Tone, it's possible based on what happened back here that this pullback we're looking for doesn't happen. It's very possible that the price keeps trending, up. If there's a close, let me put it to you this way. With these moving averages postured like they are, if there is a close above the top band, above $68,500 on one of these candles, I'm not looking for a pullback. I'm looking for the move to expand higher.
Yeah, so someone else in the live chat just said there may not be a pullback. Look, worst case scenario, we get a pullback to the middle band, right? So I'm still expecting a pullback.
So actually, yeah, I'm glad you said that, Tone, because a pullback to the middle band. So what you want to see to keep a market healthy and trending for a long extended period of time is oscillations between the top band and the middle band, top band and the middle band. And if I put the chart on weekly and we go back and look at the 2017, it was now look, this is not healthy right here. This is healthy this is coming out of the COVID crash, right? I don't even need these moving averages. Let me take them off real quick. This is healthy, trending up, coming down, trending up, testing the middle band. This is not healthy. All this time period from October 2020 all the way until March 2021 without any tests of this support, which as we can see, the price plummeted through it once it finally got down there because there was no confidence in the market that that area was going to be support. And thankfully, right here, the bottom band held. But let's go back and look at 2017 because it was so clean. It was just perfect oscillations all the way up to 20K. So this is what you want to see. You got to move up to the top band. Let me zoom this in a little bit. Like coming out of the bear market, top band, middle band, top band, middle band, top band, middle band, top band, middle band, top band, middle band. And then once the price started to accelerate and never come back, that's when the middle band was no longer support and the bull market ends. So on high time frames, going back to the 5-day chart, and this is what Tone and I are saying, we would not be scared by a pullback to 60K, allowing for wicks below. What we do not want to see are these 4 or 5-day candles closing below $60,000. We want to see a dip down, establishes the support, and then moving up. It would actually keep the bull market extending further into 2025, in my opinion. Does that make sense, Tone? Muted.
It does.
Yeah. But like I said, there are signals right now showing us very clearly that this is very similar to this ending of the consolidation period in 2023, and it left no pullbacks for a couple of months. So people do have to be prepared for that. Looking to buy the dip. This is kind of a period where Bitcoin has been known to keep people chasing the price because now they're confident. They're confident that it's probably not going back below 50K, 52K, and they want to get the perfect buy at 60. And the market says good luck with that. So real quick, let me show you this. Let me show you. So Tom, we'll take a look at the 50/50 EMA SMA.
Mm-hmm.
And I'll show you what I've been watching on weekly. Okay, this is exactly what I want to see. So now, again, refresher. The light green is the 55. That's a Fibonacci number. You can use the 50 as well. People like to use the 50 and the 200, but I've just stuck with the 55. And this is the 55 SMA, the darker green, which is going to have a much more lagging reaction to the price, as the EMA is always going to be reacting to the higher, to the most recent price action. So we've got these 3 weeks, these 3 bullish weeks. And if I zoom in here, we can see it is beginning to pull this moving average back up, because what we do not want to see is the dark green trending up and having this roll over and cross down, because there's no guarantee. However, every single time in the history of Bitcoin that has happened, we have gone into a bear market, right? There aren't very many examples of it, but here is the cross back in August of 2014, coming off of that $1,200 bull market run. Cross below, check it as resistance, bear market. 20K, moving averages cross below, check it as resistance at $8,000, trend to $6,000, collapse to $3,000. Right before COVID, run up to 10K, lower high, right into this cross and collapse, right? Same thing here. Now, here's one thing really interesting. I have a theory based on some other things that I've been watching that this move, yes, we've already discussed how this move is similar to 2023. I also believe from a structural standpoint that it's very similar to these lows right here. And as we can see, off of the 65K top in April 2021, there's a 50% correction, but the moving averages were still postured bullish and did what we would expect. They held a support. They were wicks down to the dark green, and that was a buying opportunity. Right here, we got a wick almost to the dark green, still a major buying opportunity, which led to a high. But now we have to be careful, because if we don't see follow through, this moving average still is in jeopardy of crossing below. And I will be cautious if I see that happen. So let me ask you this, Tom. We've got what, 14 years of data. We have 1, 2, 3, 4 examples of the cross. Tell me what you think happens if we do get this cross in the next couple of weeks.
I don't think we're gonna get the cross. Can you just zoom in on that one more time?
Yeah.
I mean, if the price keeps trending up, I don't think we're getting the cross. I think the cross will be avoided.
I think you're right. Let me show you something really. So in essence, what I'm seeing here is something very potentially bullish. I call this a moving average bouncing off of the other moving average, which going back to the $69,000 range, if up here at 65, spiking to 69,000 in November 2021, if these next couple of weeks trended higher, it would have bounced this moving average, and that would have been majorly bullish. We would have seen the price at $80,000, probably $100,000. So I actually am seeing this. What I'm seeing right now is potentially bullish, and I'll show an example of it on the daily chart of what I'm talking about. This is with the Golden Cross, 55 and 200. Okay, so now on the daily chart, we can see right here that the daily just avoided what we would call a death cross, okay, which is in essence the 50 EMA, or in my case, I've got the 55 crossing below the 200. Instead, what we got is, as the price, so here's something to consider. This is the TA thing. When you're looking at two moving averages potentially forming a death cross, with the price sitting right here, this low of 52K was 11% below the area of the cross. You have to give some consideration that the lows might be in. If the price was only 5%, 5% below this, it's more bearish. As you can see, the price got pulled into the cross, and the green moving average, quote, bounced off of the purple. That's bullish. I love when I see that signal. I absolutely love when I see that signal. We got the same thing, the exact same thing back here off this consolidation. Exact same thing. The death cross never really confirmed, where there were two bounces and then the price was gone. So I'm really liking what I'm seeing there. Here's one thing I look for coming out of lows is a golden cross on the 12-hour. All right, now, this is an argument right now for a correction, because in the opposite of what I just stated, we have a 55 to 200 golden cross, and we can see right here, back in July of 2024, as the cross was forming, the price was fairly high above the cross, and it got a nice test, which gave one more high up to 70K. So this tells us, from a TA standpoint, anything down to the green moving average at this point is a buy. And that price range is in the $61,000 range that Tone and I keep talking about. So am I going to be surprised with this cross taking place right now to see a top and a correction down? No, not at all. I would want to see 60K hold the lows, but I would not see it as bearish to have the price turn around here. Where are we on the MRI on this? Oh, that's bullish, right? I'm not
very bullish.
Yeah, I'm not seeing any pullback yet. So now, when I get a golden cross, this is what I look for. It's very simple. There's 3 levels. I could even maybe add 4 levels, but I'm just going to keep it simple. There's 3 levels that I look to for dips, the 8 and the 21 EMA. Okay, so as this 21 rises, it's going to rise into this breakout zone at around 63, 64, 65K. If the price turns around and tests even, let's just say 63.5K at the yellow and moves up bullish, I'm going to find that very bullish. That means that this golden cross is being respected, and this support from these moving averages being respected, and the price is going to trend higher. Back here, after the 69, after this top right here at 70,000, we can see the price. The golden cross was in place. However, once it began to lose the green and the purple moving average, it was silent night. So what we do not want to see at this point is a reversal, a strong reversal, and flipping 60, 61K to resistance. That would actually have me bearish, looking again for more lows below 57, maybe back down here. Everything else that I'm seeing on higher time frames, that is not what I'm expecting. So, and there's one more cross, there's one more moving average cross going back to the daily. Out of lows, I look for this green, yellow 21 crossing the green, especially bouncing off of the golden cross. That is super bullish to me. That is a mega bullish setup. Again, here we're looking in the $60,000 range. So even having the price drop down to the purple 200 on daily, as long as we get the reaction that Tone's talking about, a strong buy, bouncing back up to 61, 62, I'm super bullish. And if I put the 200 on, we're going to see that it was rejected. This is the 200 SMA. So let me make this more simple. So we had 1, 2, 3, 4, 5, 6, almost 7 basic rejections coming into the 200 as we did up here. Now let's see if we can establish 4, 5, 6 closes. Oh, let's just say a week. I would like to see a full week closed above the 200 SMA. And then what we need to look for, Tone. So now we're back on the EMA SMA analysis. Coming out of October, we can see the EMA cross below. We can see rejection in August at $27,000, rejection again at $28,000, and then finally establishing the 200 with 1, 2, 3, 4, 5, 6, 7, 8, and like I said, a week. Then what needs to happen to get this type of a move, which basically propelled the price from 35K up to 70, is to have the EMA curl back above the SMA and have the SMA roll up, have them basically both postured up. So we're kind of a long way from that. We're a long way from that. It's going to take several weeks, I believe, for the price to linger above 64,000 long enough to pull this above. And then once that's in place, we're bullish. We're getting that cross as an early signal on the 12-hour right now. So we can see coming out of these October lows, we got that cross, and there never was this pullback. The price just kept rising above. And this is probably the 8 EMA holding the price right there. Yeah, 8 and 13. There you go. So now, if we're going to see price action similar to this, this might be a clue as to what to expect. Okay, this saw no pullbacks except for down to the 21 EMA and kind of to the green. So that would suggest a dip zone around $63,000 and climbing for now. For now, this is going to be rising with every single close. So let's see if we're going to get something similar to that October. But basically, we've seen a lot of evidence to suggest that the lows are in. This was a nice higher low at 52,500. It's looking very similar to either the 28K lows off of 65 or coming out of this last summer consolidation. I don't see anything yet bearish in the chart. Do you have any kind of bearish argument to present, Tony? Muted.
Yeah. I don't have a bearish argument. All I have is a pullback argument, right? I only have a pullback argument. My bearish argument only shows up if we start approaching prior swing lows, right? So we need to go below 55,000 in order to approach the swing lows of 52,000. Only then will I have bearish arguments, right? Like right now, I'm looking for a pullback. At the moment, I'm looking for a pullback to 60. Anything lower than that, now I can start making bearish arguments. But at the moment, I'm bullish. It's just that there's some more resistance we need to get through, because like right now, I'm like my target for the S&P is 8 million points, right? We are an all-time high, and there's no more resistance, right? So I have absolutely no upper bound on the S&P, right? S&P is going to infinity. Gold is going to infinity. I have some targets as to where some good profit take might be, right? But I have zero bearish thoughts in my mind on gold or S&P 500. And I am always like this at every all-time high of every asset. And if anyone thinks this view is insane, then you would have said this 80 years ago when the stock market has done nothing but up in 80 years, right? With a few hiccups, like 87, 2000, 2009. But you take any gold investor coming out of the Great Depression and any S&P investor, and one is laughable at the other.
Right. So,
right?
Yeah. One of my goals when we do these streams, Tone, is to try to help people get clear levels in mind. Okay. So I think we have helped to identify a few clear levels. I'm seeing 67K as kind of a clear level where the price might trend to and run into some resistance. And we've defined, let's just call it 60K. We could expand that from 59 to 62K, but let's just call it 60K as kind of like a potential dip zone, right? Now, I'm going to real quick just show my 3 mega bullish early in the uptrend arguments, and then we can maybe look at a couple things and wrap it up. So here is the 2-month top. Our first stream, I said, Tone, I don't think the price is going above this high for maybe the rest of the year, but at least for several months. That was 74K, and here we are several months later. But in the tone base 1 to 4 candle correction, and it doesn't always have to be on a top. This was not an MRI top, I don't believe, but it was. Hold on, sorry. Where was it? Oh, yeah, it was. Well, it was a following candle. It was on that. It was on the 8, but we have seen now one.
Yeah. Wait. Go back to that. Go back to that, Mark.
The MRI,
right? Yeah. We are on the verge of creating a green star candle. If it doesn't happen later this, well, is this the front month of the 2-month or the back month of the 2-month?
there's 1 month left.
You have 1 month left, right? So we still have 30 days to make a green star candle out of current candle, okay? And look at every past green star candle on this chart.
Exactly. And look at this green star candle in May 2017 after the yellow has crossed the middle band. And look at this
Right.
green star candle. Look what the price did after the yellow crossed the middle band. So if we get a green star candle here. Now, I have said, what I stated prior also is the last thing that I look for, like one of the very last things I look for to expand the bull market is a 2-month close above the top band. Okay, that has been the signal to double the price and then some in the last 2 months
And the top band is literally sitting where the green star candle will appear.
will appear.
And there is another aspect to this, right? Your only example in this chart of a green star candle that followed an MRI top is back in 2017, if you want to put your cursor on that.
Right here.
Right, but can you not zoom in so that you can see the current in comparison to that one? Right, and now put your cursor on that green star candle. No, the green star candle, that one, right? This green star candle, and slide over the chart because now we can't see the future.
So just
No, the other way. We can't see the current situation. Yes. This green star candle. No, put your cursor back on.
Yeah, I'm sorry, I'm moving you out of there. Right there.
Okay. This green star candle was a lot more dangerous to invest into than the current one we're about to get. Because the one we're about to get is taking place with a 4-candle consolidation versus that one, which took place as a blow-off new all-time high.
I agree. Definitely agree. And just for those that can't see, that green star candle in 2017 May started at $1,350, and the month closed at $2,500. That was a massive. What is that percentage? Let's just take a look.
You'll show. Just put your cursor on it and look up. 82%. 82%. No, it tells you up at the top. You don't even need to do that.
Really?
Yeah.
Show me how to do
If
that.
you just hold your cursor there and look at the open, high, low, close, and then it shows you the percent.
Got you. Yep. Right there.
Yep. 82%.
Whew. Well, let's just play a fun game real quick. Let's just put 82% on top of the top band. See when that green star candle comes, what that might look like. That would be 130K. I don't think it's unreasonable at all.
I think it's next candle. Yeah, I think it's unreasonable in current candle, but I think next candle, right? So actually, in a perfect world, in a perfect world, we get the green star, unlike what month it's still September, right? In a perfect world, we get the green star. It shows up for the first time on October 29th, right? Like right at the end of the month, right? And then it allows people to enter right at the end of the month, and then next month is the massive month on the breakout, right? So it's the candle following the green star candle.
Exactly. So to me,
so I don't see this happening current month, right?
No, I don't.
And by current month, I mean October, right?
Okay.
But I can see November, December being an absolute monster.
Okay, so let's talk about some historical stats real quick. I just kind of have these memorized a little bit. So this is one of the strongest Septembers we've ever seen. Septembers are historically red months. 10 out of 14 prior to this were red. But what a lot of people were not aware of, you have to take into account the halving years and the election years. 2 of the 4 that were green were in election years / halving years. So I think we might have a trend now. We might have a trend. This is the 3rd September after a halving year and in an election year that has landed green. And then the other statistics that follow that are the Octobers and the Novembers. Basically, the Q4 that follows that green September is bullish. And in general, Q4s are bullish. But Historically, Octobers are on average plus 20%, and Novembers are historically plus 40 to 45%. So if you tag those gains onto the current price of Bitcoin, we're looking at $100,000 by the end of the year. Like, this is the first time that I have felt confident in saying, I think it's possible to see Bitcoin at 100K by the end of December.
I actually agree with you. And I'm gonna, when you're done with screen share, I want to show something because I just, while you were talking, I updated my spreadsheet on ETF distributions.
Okay.
And I'm seeing some really cool stuff here. Well,
All
like
right.
now that I get to, oh wow, okay, one second. There's one more thing I need to update here.
Let me just show.
Let,
I'll be done
I want to update the volume.
in like a
Yeah,
quick.
go ahead.
So I just want to show. the other long-term trend bullish signals we've been taking a look at. This is again the 55-55 EMA above SMA, and now they're diverging. Now we're starting to get some strength as the EMA trends higher above the SMA, and the SMA is has an upward trajectory. We've only had two examples of this cross in history. It was January 2017 we got the cross. That basically, and here are the other interesting things about these crosses. They took place with the price at the prior all-time high. Okay, I've mentioned this on the prior streams. So here we are in January, February, March 2017, around 1200. Once we started getting momentum of with the momentum diverging away and the 55 SMA curling up, that's when 2017 took off. Same thing here. The cross in December 2020 took place as the price was ranging right into the 20,000K range, and we saw the price double up to 40K and then hit 65K. So this cross has been in effect since the price hit the all-time high. It's exact same pattern. It's amazing how in fact, it's kind of scary how Bitcoin continues to roll these patterns through so many different types of price action. But again, this is not an easy cross to get. We're talking about the 3-week chart and the 55 moving averages on those 3-week charts. So to undo this momentum at this point is going to be very difficult. And as soon as these highs, as soon as this swing high, or even this resistance at 69K is fully dealt with, we are going to see an acceleration like we saw here in 2017 and 2020, in my opinion. And real quick, let me go back. Let me go to this chart right here. We are on day 160. I need to adjust this. The purple. So now let me zoom this out really quick so everyone can just see what I'm looking at. This is just my overall post-halving, pre-halving, top to top, bottom to bottom, all-inclusive vacation tour of Bitcoin. But the important thing to look at are the purple shaded areas. This is the time post-halving. We are on day 159. We began to see momentum in day 164 in 2020 and 162 in 2016. 2012 was an anomaly. However, there was a bunch of sideways price action. If I actually went back to the sideways price action prior to the halving, it times right to the 160-day mark. So now we are in the window where dips are potentially becoming precious items, because we are looking at the price starting to gain momentum at these highs at day 160. And historically, it's the next week or two that we start to see some significant momentum. And I still have my timing of this top to about a year from now. It might be earlier than expected. This is based on several things, just average. I'm just taking the average of lows to lows, high to highs, basically looking at about 510 days after the halving. And I'm still staying conservative with a Fibonacci extension move up to 150K. I hope I'm wrong. I think it's possible that this 150K could get obliterated. But I'm just staying conservative. I think that's a reasonable Fibonacci extension. I believe it's the 2.618 that we're looking at there. And I'm timing it to a year from now with a potential bottom of the next bear market a year after that, late September. Okay, that's about all I have for this. I think we've covered quite a fair amount. So why don't you take the screen?
All right. Try to do that here. Okay, so what I just did while multitasking, listening to Mark, and what I just did was I updated the spreadsheet of how much Bitcoin the ETFs have sucked in. And this data is showing me a lot. So the first thing is the amount of volume and the amount of market cap. I mean, BlackRock is just absolutely crushing it. You can see that the amount of Bitcoin held by Fidelity has not changed at all. So I updated all the sheets as well. I turned this into monthly data instead of weekly data. You can see how Fidelity ETF is down from July. So it's basically the amount of Bitcoin in Fidelity has not changed in 3 months. Okay, in fact, they're actually down this month alone. So there's massive rotation out of Fidelity and into the BlackRock ETF. Now, the BlackRock ETF is up this month a little bit. So this is not a great month, but it's turning into a very decent quarter. So here's the monthly data. I know I'm no longer going to be looking at it in weekly scale. It just doesn't make sense anymore. And I didn't have enough. I got tired of updating this weekly. So now I'm just going to update it randomly during the month. And then I'm going to make sure I update it at month end. Here's the part that's making me super bullish. So let's look at the quarterly data. Okay. Here's the quarterly data. Now, in one quarter, there was 40,000 Bitcoin being mined. Now, keep in mind that there is a halving involved. And in Q1, there was double the amount of Bitcoin being mined. So in Q1 of this year, because the halving came in April. So January, February, March, when the Bitcoin ETFs added 216,000 Bitcoin, there was 81,000 Bitcoin being mined, so it was double. In Q2, where there was 40,000 Bitcoin mined, maybe a little bit more, maybe 50,000 Bitcoin mined, because the halving came at the end of the month, the ETFs did not purchase more Bitcoin than was mined that quarter. But right now, we are ending Q3. And we're probably going to end Q3 with over 60,000 Bitcoin. We're just 2,500 Bitcoin away from 60,000. And yesterday, there was 5,000 Bitcoin purchased. And today is an up day. So unless Monday is a crash, we are going to close the quarter at above 60,000 Bitcoin, which is something I really want to see. I want to see us close the quarter above 60,000 Bitcoin. And now we're going to go back and we're going to look at the price chart. So just remember these numbers, right? Triple the amount, almost triple. So 1.5 times the amount of Bitcoin being mined, less than Bitcoin being mined, and 50% more than the Bitcoin being mined. If we go to the quarterly chart, this is the monthly chart. Let's flip it to the quarterly chart. Here's our 3-month chart. Now, the month of January, remember, that's the month where 81,000 Bitcoin was mined. That's the quarter, sorry. The quarter where 80 Bitcoin, I'm going to use round numbers. 80 Bitcoin mined, 200 Bitcoin purchased. And we're talking about thousands. Now, also remember, everyone knew the ETF was coming. So a lot of the run-up and speculation in the price of Bitcoin took place in the month before, in the 2 months before, right? If I go back to the monthly chart, you see that the run-up began in October. So October, November, December. So 1 quarter prior had a huge run-up, and then January when the ETF launched, once you make a bunch of money, you're going to sell the news event, right? So the sell the news event can only happen if there was expectation of the news to allow people to sell the news, right? If the news is unexpected and no one was ready to sell the news is not going to get sold. The news is going to pump the market on a breakaway gap. Mark, feel free to disagree with anything I say, by the way.
Nope, I'm tracking.
Now, go ahead.
Real quick question. I'm wondering if anyone in the chat has any idea of how much Bitcoin is floating on the exchanges. Typically it's around 2 million, I think, but there's so much Bitcoin has flown off the exchanges. It's at lows right now. So I'm curious to know what the demand is, like where the squeeze could come from.
So speaking of squeeze, so here we go, right? This front month of this year, front quarter of this year, where 80,000 Bitcoin mined, 200,000 Bitcoin went into cold storage with the ETFs, was additionally assisted by the quarter before it with extra purchases. Okay. Now then we had a quarter where 40,000 Bitcoin mined, only 31,000 Bitcoin purchased, right? So we came up 25% shy. The current quarter, we are 50% above mined Bitcoin for the quarter. So we're talking 40,000 Bitcoin mined, 60,000 Bitcoin purchased. And we're still not back to the prior highs. If next quarter comes in, and I think next quarter is going to come in double again. It's not going to come in, 80,000 versus 200,000. But at 40,000 Bitcoin mined, I think next quarter is coming in at 80 to 100,000 Bitcoin purchased.
Next quarter.
Next quarter, right? We're talking October, November, December. And I just don't see how the exchanges, and I would say there is less than 2 million on the exchanges. This might be Googleable. How much Bitcoin is on exchanges? Someone's gotta have a chart.
Yeah, I think it's got to be less now.
As of September 26, there were 19.8 million Bitcoins in circulation. That doesn't help us.
I think the exchanges are continuing to show lows held on the exchanges. The balances continue to drop.
So here we go. It's a simple Excel thing. So here, Glassnode has it. So we need top 10 exchanges. Wow, BitMax, how the mighty have fallen. Can I highlight any of this? Yes. So we'll just do top 10.
That's on Glassnode.
2.3 million. I'm a little surprised it's that high.
I am too. I thought it would be under 2 million. I thought it would be less than that.
Yeah. It looks like it's 2.3 million available. Either way, I mean, this is the Bitcoin that goes into cold storage. I think we're doubling mine supply next quarter. And remember, the last time we doubled the mine supply in a quarter was Q1 of this year. And you can see the Q1 chart of this year. That was a 70% upswing. And that was after we already had a 56% upswing in the quarter before. So I don't see why we can't replicate Q1 of this year in Q4. And if we replicate Q1 in Q4, we're looking at, oh, there it is. That's probably it. This is a 72% upswing. I don't know what it's there for, but that's pretty close to it. That puts us at 130, same number you had.
Yeah. I think that's super likely.
I'm not sure what this represents. This is normally my weekly chart. I'm not really sure why I put that, but it's not, this has been here for a while. But whatever this represents, it's close to what I'm now. Keep in mind, this is probably going to come from a lower level. So 115.
115.
115. Well, it's at 72. Again, I'm not sure what this represents. It's really 68. So let's say 110. I can totally see that happening in Q4.
Yeah. Yeah. I mean, the average moves brings Bitcoin to 100K from mid 60K by end of December, by the end of the year.
Yeah.
And you know, I mean, there's no guarantee that these patterns are going to repeat, but like I was showing earlier, it's actually crazy how similar these cycles and patterns remain, even though the price does completely different things within the cycle. So I don't see anything yet so far that we're not tracking with anticipated Q4s from history. And
Yeah, I mean, we're dealing with a quarter that, acquired, and then we're talking about one type of entity, right? We're not talking about, we're just talking about the ETFs. We're only talking about the ETFs bought 50% more Bitcoin that was mined that quarter.
Hey Tone, let's let me show something real quick, because I want to defend oh, okay, I want to defend Consensio a little bit real quick, but I can't share.
My version of it.
I have mine pulled up right now.
Okay.
I can't share.
Okay, one second. In case anyone's wondering, I am going 100% bullish either today or Monday. I mean, I know the long-term moving average is declining,
Well,
and I'm not sure how it looks on the weekly chart.
well, we'll take a look at that real quick. Okay.
The weekly chart looks very different. Oh, my moving averages switch when I go to weekly. No wonder. Yeah, I'm not gonna do that right now. Yeah, I'll give Mark the screen share. Go for it.
Okay, hold on. Let's see.
Oh, Mark, we also have 5 minutes left. I actually have to be somewhere soon.
No problem. This will just take 2 minutes. So we are talking about the validity of a Consensio on 5-day compared to weekly or whatever we're looking at. Here, I happen to have it on a 5-day chart. Here was our last buy signal right here. Last buy signal was in October 2023. If you're actually following Consensio rules, you would have been patient and would not have entered until about $34,000. Now, if I put it on the weekly, we're going to get a very similar entry. Here's the signal. The black was already trending up. So once the moving averages have crossed, you're going to get in around $35,000. But here's the big difference. Here was the first close below where you might have been taking some profit at $57,000 and then getting whipped around back up. This is really hard. Consensio does not work well when we get these long sideways consolidations. However, if we go back to the 5-day chart, it would have had you exiting at $63,000, significantly higher. And now the way that I like to do this is you can sell the swings Okay, once you get the signal, like once you get, let me eliminate the yellow because that's one that I added. But once you get a close below the black, and even just this short term, you can begin to take some profits. So now you entered here at 33K. You haven't made any moves. Maybe you've added to your position on the bullish, but you don't have to do anything until 63K, right? So that is a, let's just say you got out at the very bottom. That's a 78% trade right there on one move. Now, you can just take small, you can just sell small amounts, and then any bounce into the long-term moving average until the signal is strong again, you can make stronger sells up here. So Consensio has not yet put you back into a trade, because according to Tyler's very conservative rules, he's not going to go back into Bitcoin again. So basically, one trade made you 80%. You missed all of this mess right here. And now we've got the black moving average flat to curling up. As soon as the blue is crossed above it, you're back in, right? So whereas the weekly is not going to get you back in for a long time at this point, because the weekly is kind of rolling over. This blue moving average needs to float around, curl back up, and cross above the black. It might not have you back in until the very end of October at who knows what price, right? So I still think that if you're actually using Consensio, how Tyler really designed it to be, flipping to the slightly lower time frame can help you get in and out just at slightly better prices. That's my, and then real quick, let's just take a look at the 2-week, because this is the macro look. Okay. Losing the long-term moving average, that's when the bull market is over. We're nowhere close to that. We were very dangerously close to it down here in the low 50Ks. 1 or 2 bearish weeks below 50K, I would not have been this bullish at all. But instead, we've got this current 2-week candle. We're trying to close. There's 9 days left in this candle, trying to close back above. And then to get this time frame bullish, all we need is the gray. Let me see if I can. I got too much stuff up here. Is the gray. Here, let me zoom in. To cross back above the blue. That's it, right? And then this 2-week will be fully bullish. Black is trending strong to the upside. So this is our absolute like last chance resort, most conservative possible look that Consensio gives you. I just find it useful on several time frames. It doesn't just have to be on the weekly. I mean, you can even just look at it on the daily, right? It's bullish. We're bullish on the daily. You're getting with
Mark,
the
I gotta go.
Yeah, I'm good too. So anyway, that's what I thought. I'm sticking with 4 and 5 day for Consensio. I'll happily debate Socrates on that.
All right, I'm gonna just say real quick. People are saying in the comments this is the most bullish September we ever had. Maybe if you look at things in isolation on a spreadsheet, this might be the most bullish September we ever had. But I will just point out that this September right here in 2015 is a way better September, because this September candle, at no point in that candle scared you of getting out of the market. It was after a swing low was made in August. It created a nice, comfortable area to get back in, and the following month was a green star candle. And the following year, we had the same exact thing. We had the swing low in August, followed by a nice calm September, followed by a breakout candle with a green star in October. And if we go to right now, I think it's repeating once again. We had a little more volatile September. Like, honestly, I would rather take a doji candle here without the swing low. Okay? I would prefer that as a way more bullish September. It doesn't matter to me that this is the best green body we ever had. if the green body involves a downward wick, it's not the best candle, okay? You want to avoid the wicks. So to me, this is not the best September, even though statistically it might be. What I am looking for, however, is a green star candle. And it doesn't look like we're going to get a green star candle. 1, 2, 3, shit. On Monday, we're going to need a close above, what is this line? 68,000. There's that 67.5, right? If on Monday we can close Bitcoin above 67.5, and I really hope we do. I really hope we close this month at 67.5 to flip the MRI. Because if we flip the MRI on Monday, by Monday's close, end of month close, it allows us to get a green star candle next month. And that would be the perfect scenario. And I'm just going to close out on that.
That would be green star candle in October, which is typically 20% month. Good to go.
Right. And remember, the last time, also last year, that didn't happen either, right? September, oh, look at last, oh, sorry, that's October. Right. See, last September was also like a doji month, and then October was the big month, and then the green star came in November. Honestly, even if we don't flip the count, I'm gonna treat next month like a green star candle. I don't see why I don't see why I wouldn't.
Yeah, this sideways price action without fully losing 50K, I think has potentially provided fuel for Bitcoin well into 2025. So
All right, and on this note, I gotta go, guys. Thank you for watching. It's been about 2 hours. Please like, subscribe, share if you like this video. Mark, please post it in our private group chats with other analysts. And thank you all so much for watching. I gotta run. This was a great show, and yeah, we're both pretty damn bullish. See you all on the next one.
Later.